Okay, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, March 23rd. Good to be with you guys here this morning. Good morning to everyone here in the room. Hussein, Madad, Mark, Patrick, Pete. We got a whole crew. Aurelian's in the house, Alan's in the house, Eileen, of course, saying there's blizzard effects here affecting power. If I duck out at some point, power went out. Cheers, Eileen. Stay safe. Yeah, I heard you guys are getting a big storm out there. All right, so lots to talk about. We've been kind of focused on the sterling and euro crosses. The event risk for the week remains rather low, so you haven't really seen much in the way of major volatility, although the dollar rally continues to push higher. So remember yesterday rather, we were talking about this key confluence near-term resistance range, basically 11,970, which constitutes a 50% retracement of the advance off that May low. Also that longer dated former channel resistance multi-year, now channel support, combining there also with the 50 line of the current operative slope. So we're testing that right now. We could get a push higher, guys, towards 1200. I do want to leave that possibility to check that February low before it turns over, but certainly we are seeing a near-term trigger in momentum continuing to suggest we got some more upside in the near term for the dollar. As you look at the dollar performance, relatively speaking, it is stronger against all its major counterparts. Biggest loser on the session, Kiwi down 0.73 and the Aussie down 0.6. A look at the equity board has us sort of in the same picture. Really not much in the way of anything to get excited about. Europe is mixed on the session. You got the CAC 40 up 0.3%. FTSE's almost flat on the session. DAX with a percentage point almost to the upside. IBEX 35 down 0.34. So again, on the back of the horrible terrorist attacks that we saw yesterday, guys, there's a lot of talk that the strength that you're seeing in the pound is attributed to that. What impact that event will have on the referendum in June. You saw the pound give us a little bit of a blip on the radar, but we All right. I think we're back, guys. I apologize about the sound again. So here's that sterling chart. Again, 140, 174. If you guys remember, that was the bullish invalidation level. We're testing it right now, and we're looking for a break below the median line to really validate the continuation lower. As it stands, just as a disclaimer, I'm actually looking for some support and a possible rebound for a long position. You've been getting some really nice divergence into the lows. Okay, one of the reference points sub 30, the other one above. Price making a lower low. And the trigger break that we just kind of rebounded off of is what I'll be focused on heading into the US trade session. One thing to note, guys, it's never prudent to be trying to call a low, and I don't want to get into the habit of doing that, but on a downside stretch of this magnitude with divergence into a major 50% retracement, slope support has me at least looking for long triggers. Here's what the daily chart looks like, by the way, and again, on a broader theme, if we take a look back, the median line and that slider off the September lows, right? We're testing those right now. Okay, what would have me comfortable getting back on the short side for the pound? Very simple, a break sub 40.90. So while this is the bullish invalidation level, I'm not really looking to do anything in here. Maybe if we get a convincing long trigger, 40.90, 40.94, a break below that really validates a break of the median line and the broader structure and shifts the focus much more dramatically, I think, to the downside. So for the pound, again, a quick look at what we were looking at yesterday. Here's what the pound looked like on last night's radar chart. This was the slope. And again, we noted, be on the lookout for, or we could still get a drop to test that major key support at 141.47. And that's exactly what we got. We're kind of sitting here now. Again, heading into the US session, we'll be looking to see if we have any long triggers. Here's what the pound looked like earlier today. This is the 5-minute chart and the 1-minute chart that I've been tracking. You had a nice long trigger here actually earlier today. Didn't take anything on it because the stop was a little bit far out, but a short trigger actually just gave out. All right, so we'll look for this drop to find some support, possibly near that median line, 41.33. and we'll be on the lookout for a possible rebound off that region. Again, 40.94, a break below that really validates a continuation lower for British pound. Any questions on the sterling before we move off? I know we just kind of jumped off topic here, guys, real quick, but I think this is a little bit more of a pertinent trade at this point with the turn we just saw. And one other thing I want to note is, although we saw that break in overnight into overbought condition, when I came in earlier today, I was really, encouraged by that break, the hold at 40, the hold at 40. But look what happened subsequent to the trigger break. Failure ahead of 60, break sub 40. So at least on the immediate term, again, keep in mind this is a 1 minute chart, so we don't want to put too much emphasis on it. But even in the immediate term, the momentum still remains negative here. So we'll continue to see if we can get that turn higher, specifically that trigger on the 30 minute. Would be a validation, at least for a near-term recovery. All right, so that's the pound. Okay, and a quick reminder that tomorrow's pound data is really what the main event will be for the pound crosses. Here's what we're looking for tomorrow. Retail sales are expected to come in softer for the month of February across the board, guys. Especially the year-on-year, we're expecting to see a drop from 5% to 3.5. If you strip out, or if you include rather, auto and fuel, you could see a much even deeper decrease. You're looking for a contraction of 0.7% for the month of February. An interesting day for me will be tomorrow because we also get the yen inflation numbers from Japan, and certainly that puts sterling yen on the radar. So let's just jump into yesterday's intraday update. We'll take a quick look at what we're expecting for the sterling yen here, specifically heading to Thursday's double whammy print for UK retail sales and Japanese inflation. So here's what we looked like yesterday. I don't like doing this, tacking on a median line reference point to a low we just made, but I think it fits pretty well. And if you do that, adjust the median line to that low, the slope actually matches the ascent with precision here. So I'm working under the premise that while above this trend line here or above that median line parallel, we'll continue to favor sort of looking to buy pullbacks in pound yen. Here's what the daily chart looks like first. Okay, there's that same reference, okay, for the proposed median line. We don't have conviction on this just yet. The only thing that we've seen is a nice pivot right off the median line here and support on the early March rally. Okay, if this is indeed turning, we want to see that 59.40 level again, the same level we were talking about. We probed below it yesterday, but we closed well above. Same region. We'll want to stay constructive while above that. Also take note of the momentum profile and what's changing here. We talked yesterday about the divergence that we've been getting all along the lows, but also on the break above 40, a defense of 40 as support, a defense of 40 as support, and it looks like now we're trying to defend it as support again. So the daily chart shift suggesting, okay, maybe the downside is waning here. We'll continue to favor, we'll be looking for long scalps while within this formation, the 30-minute looks pretty clean. Okay, there's that drop in overnight trade. Here's where we were, trading right around this region. You got a false break scenario here where it broke back below that retracement, the 50% at 59.40, but look what happened to momentum. Even on the near-term chart, or in the 30-minute chart rather, momentum slams into 40 and rebounds higher. The lows that we made yesterday, okay, right after the webinar, the subsequent low that we made had some divergence in momentum. So you're getting that shift starting to manifest itself on the near-term charts as well. We do need a break above 60.12, which was the initial opening range low on Monday, to validate a move higher. Also note that you have the median line off the highs from that March 4th rally, coinciding right there as well, heading into the U.S. Open. So that's sort of the level to beat to get a little bit more conviction on the turnaround here for pound yen. And I want to be mindful of this trigger right here. Okay, so the real test on this is going to be that median line support there, and if we can hold that. Aurelian says, when you discuss the yen, please update Aussie yen when there's time. Thanks. Yeah, Aurelian, we'll take a look at Aussie yen. I'm not really a big fan of Aussie yen from where we're trading right now, but let me jot that down. I'll definitely take a look for you, no problems. Okay, any questions on sterling yen before we move off? Again, a quick reminder, guys, you can take a quick snapshot of any of the charts you see by clicking on that camera button in the top right-hand corner if you want to reference these later in the day. Amir says, hi, Michael, long time. Great to see you, sir. Can we have a quick look on Euro Key? On Euro, or do you mean each separately? Euro Key, oh, Euro Dollar and Kiwi Dollar. Sure. We'll definitely take a look at Euro Dollar. Kiwi Dollar, haven't been a big fan, as I said, these days, but we'll take a look at that as well for you. No problem. Keep your questions coming, guys. As soon as we get through these, we'll take all your questions on any pairs or strategy questions that you have. So that is pound yen from last night's update. Again, a nice wider range ATR with a 52 pip, a quarter of the daily ATR, giving us some nice ranges to play with. If we see a break back below, that median line will go neutral. Really, you need to see a break of this low to continue favoring the downside, targeting the lower median line parallel for that broader structure off the highs of the month. Okay, going back to the radar charts from yesterday, we went over sterling dollar. I want to just touch on sterling Swiss. Still kind of playing coy here with us. Here's what sterling Swiss looks like on the daily chart. Okay, made a break of the lows. The next near-term key support target is 37.40. That's a longer dated 618 retracement. Just below that, you have that sliding parallel for the operative slope. It's the same as this slope, extending off that early July high. Call it the exact low for August. A little bit of a pivot here last month. Coincides or comes in just below that 618 at 37.40. We'll extend that into like 37 handle, basically. Another wider range ATR, not quite as big, but pretty close. Here's what sterling Swiss looks like on the 30-minute. Okay, and here's what we looked like last night. So a very similar scenario to what we're looking at with the sterling dollar and the sterling yen. Again, if you take a pitchfork off the lows, take that high that we made on the 10th and the low that we made yesterday, we said, you know what? If this thing is turning, look for support at 37.88. Okay. What's so big about 37.88? It's just an 88.6 retracement, no big deal, but it's also a nice confluence of the proposed ascending median line and the current descending median line. I think we'll all agree that this has been catching price rather well and has defined these turns rather well since the highs of the month. So you had both of those converging right here at 37.88. Here's the defense that we made in early European trade today. We saw a nice rebound off that region, and here we are coming back to test it again. At the end of the day, guys, this for me is near-term bullish invalidation. If this breaks, forget the topside rebound idea. Now, I do think that you see a probe lower, and that will give you an opportunity to get long, especially if that low offers a nice divergence price in momentum. So if this low comes in on a close basis, remember, going lower than this low, if we make a lower low and the oscillator gives us a higher low, that would be a really strong signal on some divergence, and I would look still to see that top side trigger give out for some long exposure. I think the pound is overdue, guys, basically, to put things frankly. So while it's never simple calling a turn, and it'll often take multiple attempts specifically from a scalp target to try to press it, I think sort of that's the theme I'm working with right now. And it sort of coincides pretty well, specifically with pound dollar, with what the dollar is doing, right? A little bit of a push higher in the dollar index, maybe towards that 12,000, check the February low, and a pullback might be the scenario that gives us that entry. And a lot of the trades that we're looking at, guys, are just doing that. They're coming into some interesting support where we're trying to fade the move. Dollar CAD is one of those. That's something I've been actively scalping. I'll show you that in a moment. But same thing, since we're coming off the lows and we're looking to play the turn, I'm super nimble, right? As soon as you get that first ATR, bring your stops in to break even. If it comes out and triggers you at break even, so be it. But it's better than trying to call a low and eating a stop on it. So we'll look for this sterling Swiss 37.88. A break below that, you're looking at 37.41. And this is the longer dated 618 retracement that we were looking at on the daily chart. All right. Any questions on sterling Swiss? I know, an interesting pair. You got 35 pips is a quarter of daily ATR on this one, so also a decent range. Sort of our sweet spot is usually between 25 and 35 pips on the ranges. Okay, and that is sterling Swiss. We are running through these today. Right on, guys. We got sterling yen, we got sterling dollar out there. Any questions on pound dollar? I think we went through that pretty quick, but I'm very interested to see how today pans out and if we hold those lows in pound dollar. Okay. Why did the 88.6 for the sterling Swiss on the 30-minute? Oh, let's go back. I'm not sure what you mean by why do you use Eileen. An 88.6 retracement is a very sort of not a popular retracement. It's simply square root of 786, and it's another derivation basically of the 618. So that's where it comes out. I've seen 88.6 retracements catch some ridiculous turns. It actually tends to work out better on like commodity pairs for some reason. I can't even tell you how many times the Aussie dollar, Aussie yen, Kiwi yen has found an 88.6 reversal. It's just another fib, Eileen. And for me, when I'm looking to set up my scalp charts, look, topside target here was 38.50 at 38.44, right? Well, the lows don't come in, or the retracement doesn't come in until 37.44. That's a 100 pip move to the downside, right? But when you tag on that 88.6 to give you a little bit more of a near-term target, why it was important or why it became significant, Eileen, is because it converged on the lower median line parallel. And that's why it becomes important. Okay? Again, guys, no retracement in and of itself, save the 618, obviously, which will tend to be a very important retracement. But none of those retracements in and of themselves are going to are going to hold too much conviction, right? But when those retracements converge on median line parallels, trend line resistance, moving averages, key highs or lows, high day close, low day close, those types of technical factors that we look at, it tends to become a lot more significant. Eileen, does that make sense? She says, oh, and the convergences too. Yes, absolutely. And not only that, guys, we want to use our heads. We want to be very savvy with our analysis. No retracement should just be taken on its own merits, right? But Eileen, when we tack that 88.6 on, look what happens in price, right? And one of the most important things, or the conviction things, that is when you tack on that retracement, that you see previous pivots in price. And if you tack on that 88.6, you can see resistance, resistance, break, support, 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 move off. And that pivot in and of itself gives us a little bit more conviction to hold that as a near-term target. Great question. I know it's not a very popular retracement, but trust me, I've seen it do some I've seen it catch some radical turns here. Says yes, makes sense. Yep, they are there. All right. Right on. Okay, so that's sterling Swiss, and we covered sterling dollar. Moving right along, Euro Oz. I just kind of wanted to give you a quick update on what we're looking at there. I think that one's also panning out rather nice. We got the downside break before we're getting the move higher. So here's what we were looking at last night. Let me show you this. You got a false break scenario right below the opening range for last week. So if you guys remember, we highlighted this early in the week on the Sunday update, and we said, look, essentially last week's opening range never gave out. Here's the weekly open. You set a low, you set a high on Tuesday, and you close the week right within that range. Okay, in fact, we closed just fractionally higher on the week. So coming into this week, we're looking for either a break sub last week's low, which happens to be a key 618 retracement, or a breach above 49.40 to really validate a move higher, right? As we came into this region yesterday, and here's what it looked like for Euro Oz. Okay, as we came into this region yesterday, just ahead of it, we noted there's a nice confluence with the 50 line for the current operative structure we're in, right? False break above that momentum resistance trigger, move lower, and then right into the opening range of Asia. It failed and reversed right through. Now, you didn't get the topside break of the Asia opening range until the open of London, and now we're looking for a little bit more of a substantiated rebound. So this break here we're going to designate as a false break below last week's opening range. And the focus is still either a move sub 47 or a break of the weekly high. Personally, I'm favoring the move higher. Okay. Not only on what we're seeing here, again, some divergence in momentum. Remember, divergence, all you need for divergence is that the oscillator is not confirming an extreme. Okay. Yeah, we're back on the audio, guys. I'm sorry it keeps phasing out there. Okay. Is there a question on that? Lost audio before divergence not confirming in Euro Oz? So this divergence is suggestive as you were coming into the low that the downside momentum was waning. Okay. Just want to make sure we're on the same page there. And then the break again through the resistance trigger was sort of the tell that, okay, we're moving right back through. So for Euro Aussie here, I'd like to see a pullback find support at 40 and form a new resistance trigger that allows us to get back on an entry most favorably against the opening range low for the U.S. Futures market, which is going to be 47.32. We're way off that at this point. It's still within 50 pips, but I think we're too close to the highs to try to fight this. Also, keep in mind, if this is just the simple initial weekly opening range, right, then we're checking it basically right now as resistance. Okay, so I would expect to see another pullback before we move off. That would possibly get us a nice entry if we can get a nice trigger in there. But that's sort of the game plan I'm working with. And again, if we take a zoom out here, guys, just to put things in perspective, right, there's that 50 line. I know it's been messy here over the last couple of weeks, but we've been really pivoting off it very nicely. And if this rebound off the lower median line parallel is indeed going to see a test of the median line, well, the 618 retracement of decline takes into 43.40, just above the weekly opening range. All right. Any questions on Euro Oz? Okay, so those are the 4 updates or 4 trade setups that I've been mostly involved in. I do want to take a minute to jump into dollar CAD, and then we'll jump into all your questions here, guys, on the Aussie yen, Euro dollar, Kiwi dollar. We'll definitely take a look at Aussie dollar as well. But a quick segue into dollar CAD is a very popular trade. Everyone's talking about the correlation or whatever with crude and what that means. Look, again, a trade is taken on its own merits. You saw crude yesterday just give a pullback. Everyone started panicking, but it didn't really pan out. So here's what dollar CAD looks like on the daily. Okay, the major support barrier is still 29.65. We talked about that last week. Huge region. Okay, you even had the buy sector here, a nice sliding parallel, the same slope on that region, 100% off the high, 618 off the low, best Fibonacci confluences you can find. These will typically be very nice plays. On the low, again, divergence and momentum. You got a longer dated trigger here, which panned out. broke to the downside, acted as resistance, and that's again what we're using. Comes in right at the 40 line at this point. Near-term resistance or key resistance on the near term is going to be that basic trendline resistance off the high, which comes in at this nice soft pivot, basically the opening range high for August. And that's right around the 32.15 level, 32.15, 32.16. Okay, here's the 30-minute chart looks like. And here's what we look like a couple of days ago on the 21st. Okay, so again, there's that main key support. We were working with the premise of this ascending formation. We've now broken to the downside, again checked support, and we're now using this as resistance. Okay, we broke through an overnight trade. I'll show you the positions I took on this one in just a moment. But basically, the levels, the horizontal levels are unchanged, guys. I'm not going to stress this slope. In fact, my initial exit on last night's scalp was right at slope resistance. I had a limit for another half of the trade at 31. And I put the rest stop to break even. Unfortunately, on this dip here this morning, it did break me at break even. So I'm not in it at this rally here, but certainly we'll have, I'm sure we'll have much more opportunities as we get into the U.S. session. Also keep in mind, heading into those lows that we made yesterday, the reason that we took the long, you had some divergence in momentum. Remember, you're looking at the close, lower low, the oscillator making a slightly higher low, and then you had a nice trigger break to the upside. Here's what it looks like, or here's what it looked like on the 30-minute, on the 5-minute charts. What is this? Dollar CAD. Gary says, that's it. I'm never trading gold again. Totally the new abomination. Oh, my man. Sorry to hear that. We'll take a look at gold. Let me jot that down. It's tricky here. In fact, Gary, I'm writing the quarterly forecasts for Daily FX. As soon as I'm done writing that, we'll publish it here on SB so you guys get a quick little preview. But it's very tricky here. I don't blame you. I wouldn't say it's abomination status just yet, Gary, but it is a very difficult call. I'm not gonna lie to you. I've been writing it for the last couple of days, and the technicals are just, it could go both ways. The broader trade remains constructive, but I think near term you are, vulnerable for some weaknesses. We'll jump into that in a moment. Dollar CAD. Here's what it looked like last night. Just kind of wanted to walk you through this one. So here was the entry last night. You had a momentum trigger on the 5-minute chart that gave out. Okay. Didn't do anything on that dip because, again, you have no concrete evidence that that's a low. But on the divergence that we saw on the daily chart that I just pointed out to you, okay, and then on the fact that we've came back and tested 40 as quick support. Not only did you see a really strong rebound, but the former resistance trigger acting as support is very encouraging. Add to that the stop was a mere like 15 pips to the downside. You're looking for 38 pips. Last night, the quarterly ATR came right into 40, held. As soon as you got that rebound to 50, we took the long, so it ended up executing somewhere near 30.45. Like I said, last night it was at 38 pips for a quarter of the ATR. And this first exit here was right at former median line support, now resistance, right? There was a limit I put at 31 in overnight trade that triggered up here, got the pullback, and again, unfortunately, that stopped me out at break even, literally at the low before reversing. Just bad luck on this one, but we'll have plenty of more opportunities. If you guys are on the swing side of things, they're holding longs there. Jamie's looking for a much more broader topside target. Initial topside resistance on the immediate term, you're looking still at that 618 extension. I don't want to stress it so much at this point, but I would be looking more so towards that 31.66, basically the low that you made for March, for the opening range of March, basically. That's basically this low. Okay? Again, the close low for that same session comes in at 32.14, and that coincides a little bit more with that upper median line or basic resistance. Any questions on dollar CAD before we move off? If we clear this, by the way, keep in mind, simple weekly opening range break would be constituted by such a move, and that would only validate, only further fuel our conviction for the long side scalp. Okay, and that's dollar CAD. I've been in and out of this one for a while. Sterling yen. I didn't take anything last night in sterling yen, but I had a long on sterling, on some of this, a couple of sterling crosses last night. We'll be looking again, see if we can get a little bit better of an entry on that. Okay, into your questions here. First up was, I see your comments, Gary. I'll go over that in just a moment, brother. Aussie yen looks like this. I think this was for Amir, if I'm not mistaken. Oh, Amir, I missed one of your questions. Sterling dollar, can we say that 147.40 is broken now? I think you mean 141. Oh, I read it wrong. 141.74 is broken now. Yeah, I would say that that's broken, sure. And we even took out the opening range lows for Europe, right? But my point is this. I'm not really looking to sell sterling at the lows of the week, right? It's a hard bargain, a hard trade to argue for. So for me, I still think that we could settle in and find some support sometime over the next 24 hours, whether it's going to be at that median line or at the 618. Remember, for me to favor shorts, and this is what I said earlier, Amir, I would need to see a push sub 40.96. Other than that, I am expecting it to move lower, but direction is only half the game, right? There's no risk management here on trying to sell lower. Your stops are going to be completely out of the water. So we want to be looking for this decline to possibly offer some support. Again, I'm just going to continue to note the divergence that we're seeing along the lows here. All right, so it could catch some support early in the session. Amir, I hope that answers your question. Also, as it pertains to, it was for Aurelian, Aussie yen. Here's what Aussie yen looks like, Aurelian, on the daily chart first. Okay, not really a fan of trading this kind of chop. Now, if anything, it's going to be a range for a scalp for near-term positions. And I wouldn't be too against trading the current operative range using basically a range high of 85.80, range lows somewhere near 84, 84.15. Basically is the same range that we've held over the last 6 days. That said, I kind of like near-term some yen weakness, and I kind of like near-term some Aussie weakness. So I don't really know what to do with Aussie yen. Here's what the intraday chart looks like. Let's see where that's at this point. All right, so here it is. Right, and it's pretty messy. It's interesting you say that because just yesterday I was playing around with this, and the only thing that I kind of came up with was this pitchfork formation right here. I don't like it. It's been messy, not the cleanest thing, but you saw a quick probe through and a pullback in overnight trade through the upper median line parallel. Really messy pivots along the median line, so not my cup of tea. If anything, this also would have probably tricked me into thinking this was a clean break of the weekly opening range, Monday, Tuesday stretch. But here we are right back below. So, Amir, or Aurelian, just to be completely frank with you, I'm neutral here. I don't really want to do anything on Aussie yen, at least near term. Okay, longer term picture, I do think that you could see a more substantiated rally. Now that we've come off the median line, I wouldn't be surprised to see a move lower towards median line support or the lower median line parallel before we move off. Long story short, topside objectives are still 86.30, the 200-day moving average at 86.94, and of course the 2016 open at 87.54. Okay, so let's say this. On a pullback, I'd love to get long. On a rally towards the yearly open, towards the upper median line parallel, I'd like to get short. Make sense? Aurelian says, understood. Thanks. Right on. Cheers, man. I appreciate that. Okay. Yes, Hussein, I've got you, my man. He says, can you please go through euro dollar? Here it comes. Here's what euro dollar looks like right now. Here's the daily chart first. Okay. So, as you guys know, on the swing side of things, Jamie's looking for long positions near 111.80, so that's already in. Here's what the euro dollar looks like. Well, before I move to the 30-minute chart, one thing I want to note is the reversal that we saw is basically off the high day close for the year, the high day close for last month. That's the 113.20. Now, we were looking to find some support on this pullback to offer some nice entries on the long side, even from the near-term scalp standpoint. Here's what the 30-minute looks like. And you're now testing that 1618. This is a 1618 retracement from the decline off the highs in February at 111.64. Okay, this is not on the daily chart because it's just going to get too cluttered. So I didn't want to kind of, make the daily chart too overwhelming. But long story short, you're testing that 618 pivot. Also, a sliding parallel of the same slope for that broader ML. If I can zoom out here at some point. This is extending off the high that you made for October. Nice pivot. Looks like we broke that too. And here we are testing that 618 retracement. So the only thing I want to say to you is this. Look, you're still marking divergence into the low. Dollar is driving, the euro moves down, says Eileen. Yes, dollar strength, right? Dollar strength is moving dollar CAD up like we wanted. It's moving euro dollar down, which is something that we were looking for early in the week to find some entries. If you guys recall, here was the entry I was looking for earlier in the week. Again, that same median line parallel with the lower median line parallel here. We did get a nice rebound off it, but momentum couldn't do jack. I mean, this thing couldn't even clear 50 on the rebound. And then here we are breaking lower. I'm still looking for the pullback to offer some nice long triggers here, Hussein. Nothing's changed, man. We've made it outside of this median line formation, so maybe you got a deeper cut to go. You're still within the confines of this really tight descending channel formation. But again, price action making lower lows, the oscillator not making lower lows. If this candle closes and we probe through 30 again, look for that drop. Again, we'll be looking for some possible entries. Remember, the stop for at least for Jamie is until 110.45, 110.40, and that's a big region. You got the 200-day moving average and that key 618 extension. Remember, that was a huge region for us on the pivot break early in the month and on the breakdown last month was this 110.40, 110.45 region, which is dead on with that 200-day moving average now. Not expecting a drop quite that far, just for the record, but certainly the kickback off resistance here looks like it may have a little bit more to go. Resistance trigger I'd be looking at off the highs. Okay. You want to see that top side give out. Does that make sense, Hussein? I want to make sure we're on the same page. Likely see a little bit more downside before you see some upside, but I do broadly looking for euro dollar support, right? Just like we're looking for dollar index resistance. We're looking for dollar CAD to come in some resistance soon too. For a pullback, I'd love to get back on the long side of dollar CAD. For the euro, might have some more pain to go before we start to rebound, but broadly speaking, I do think you look for it low this week. He says, yes, sir. All right, Hussein. Cheers. You're welcome. All right. Next question on tap. We got Aussie yen out of the way, euro dollar out of the way, Kiwi dollar. Who wanted to see Kiwi? Was that also you, Hussein? All right. Oh, Amir, my man. Here it comes up. First things first, daily chart. This is why I'm not really keen on playing Kiwis, just because of what we're doing right now, essentially. It's huge, right? Outside week reversal, essentially, that we made, taking out the lows of the month, or at least checking the lows of the month, so checking the opening range low for the month, then going right through the opening range high for the month before pulling right back into the opening range itself. So you didn't make a topside opening range break. In fact, that reversed really hard off of the high day close from October. Excuse me, the high day closes from December is actually what caught the peak here, and then the pullback. There's a basic trend line. We've already invalidated it once, but you saw 3 touches on that, almost 4 touches, so we're checking that right now, and momentum does look pretty darn tired. Okay, you couldn't even make a test of 60 and a lower high as price made a higher high. So certainly from a lot of different standpoints, it's looking tired. It's looking like it wants to turn over. The momentum signature certainly is not constructive at this point with that kind of, with those kind of features that we just noted. Here's what the 30-minute looks like for Kiwi dollar. Now, one interpretation of this, and one thing I was looking at earlier, let me just snap these levels for you. one interpretation is this is your opening range. Here's the weekly open. Okay. You make a Monday low or a Tuesday low. You come back to try to test the weekly open, couldn't get quite that far. You broke it, and we tested it as resistance. So I am thinking lower from price action as well. One other thing to take note of, the momentum signature on the intraday turned very early in the week, right? Here's off the rally from the low. Once we got that decline, remember the things that we want to see in momentum. 40 break, still bearish, 40 break, still bearish. On the first rebound and hold of 40 support, now your focus is on a break above 60. Well, there's your 60 break. Now you want to see support at 40 to continue favoring the long side. 40 hold into the end of last week. We opened up this week with a quick drop sub 40. Resistance ahead of 60, resistance ahead of 60, resistance ahead of 60. Okay, all things that are suggesting you saw a flip from net short in momentum to constructive, and then start of the week, it's been, again, a bearish momentum signature. So largely speaking, I am looking lower. I don't like the targets per se. The only targets I would be looking at on the immediate shift would be just a basic retracement of the range from last week. Okay, and that puts the 618 right at 66.88, basically just below the lows that you made so far. Bear with me. I just want to see what this looks like. Okay, could be the proper slope. I'm not going to stress it just yet because we haven't seen any pivots at all. But again, let me just zoom this out a moment. Okay, don't want to stress that anymore. All right, so here's a sort of a butter zone I'd be watching near term. We'll call this sort of the breakdown zone. All right, a move below this I think would solidify a much more conviction short bias on this. Not only is it because it's just a 618, but again, that pivot line that you're looking at in red, I know guys, this is a very messy chart, but I just want to show you where this is all derived from. All these slopes are simply derived off of the support slope for the last two lows that we made, both in November and this year, early January or mid-January. If you take that same slope and extrapolate it to some major key highs and lows, you've seen some really nice pivots. Okay, again, extend it to the high that we made back in October. Nice pivot here. Resistance, 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 sail through. Now converges on that median line off the high and the 618. So we'll open up that range of support between 66.75 and 66.88. We'll look for some support there on the Kiwi. Don't get me wrong, Amir, if you see a rebound there, you might be in for some near-term long side exposure, but I would inevitably be looking to sell it. Okay, because if I had to make a snap judgment, and again, I don't have a conviction on this, so take it for what it's worth, but if I had to make a judgment, if someone's putting a gun to my head, I would say, yeah, this is bearish. You reversed off of the high day close from December. You failed miserably to break through the monthly opening range, and the reaction off that failure is something indicative of, traders trying to push it through the highs and an epic failure. Much more short interest coming in, slamming it lower. Now, there is event risk for the dollar tomorrow, and that's one thing that we want to take into account, specifically as we're looking at euro dollar, Aussie dollar, Kiwi dollar, right? These are things we want to take account. Tomorrow's U.S. data could be a nice market mover. We are looking for, by the way, you do have home sales later today at 10. Wouldn't expect too much there, although we are expecting a nice build. But durable goods orders is really going to be the major print. And this is the preliminary read for February. The important thing to keep in mind here is that we are expecting weakness. okay, and dramatic weakness. We're expecting from a print of 4.7 to drop to negative 3.0. If we strip out non-defense air, which is core capital goods, basically you're looking for a contraction of 0.5%. So with the market expectations already leaning on the side of a weaker read, the risk becomes if the print comes out stronger than expected. And if that happens, I would be looking for a spike higher in the dollar to fade the move. Because remember, these data prints are not going to change trend, and dollar index is coming into resistance. If we hold sub 12,000, 12,003 today, I'd be looking for a strong print to offer one last stretch in the dollar before reversing. Obviously, if we get a much weaker than expected print, we'll look to see that reversal, if that reversal does actually pan out. Heading into Friday, one last thing is we do get the revisions on fourth quarter growth numbers here in the United States, annualized GDP, personal consumption, core PCE, which is the Fed's preferred gauge of inflation. No revisions are expected for this third read. So unless there is a revision, don't expect this to offer too much volatility heading into the close of the week. All right. Amir, does that help on the Kiwi? Does that give you some clarity on that? Last but not least, where is he? Gary, you there, my man? Amir, you're more than welcome. Cheers, mate. Here's gold, brother. Look, what could we say? Let me take a step back. Here's what the weekly chart looks like, and this is why, for me, the crude trade or the gold trade has been a little bit tricky. Gosh darn it. Dollar Catch seems to be still running here. Here's what the weekly chart looks like for gold. So I know I've showed you this here before in the webinars, guys, but Gary, look at a couple of things. First of all, the weekly chart was showing that we failed to close above basic trendline resistance. Now, this is not trendline resistance. This is mirror slope of the ascent off the lows here. Okay, and if you take that slope and extrapolate it or extend it to the highs there, you can see it caught that rather nicely. Momentum stuck on a ceiling at 70 to the pip almost, right? And you saw these really long wicks and a close lower at the peak really give us an indication that near term it looks like it could be teetering out. The one thing you want to keep into account with this, Gary, is that the dollar's been really strong, man. And while I don't want to rule out the possibility of the dollar rallying alongside the gold trade, when the dollar sees that kind of rally, and I think everyone's going to agree with me over the last couple of days, this has been a pretty substantiated rally, right? When the dollar sees this kind of push, it's difficult for gold to find any constructive move, okay? So that said, what I'm trying to say basically is I wouldn't be too surprised to see that the gold trade has pulled back. The broader trade still remains constructive above 1193. Basically, you're looking at that high that we made back late in October of last year. You're looking at a basic 38.2 retracement from the advance off last year's low, and you're looking at that median line all converging right here. So yeah, I wouldn't be too surprised to see this take some back. I know that you're kidding. He says gold daily candles are ridiculous. Compare them to the actual abomination just for a laugh. With that respect, my man, I'm right with you. I mean, even the weekly chart, man, even the weekly candles look pretty ridiculous here. But yes, near term, it has made a break. Again, if we take a look at the daily chart here for gold, you can see basic trendline support. Remember, this was a consolidation feature that we were following for a while. We got the topside break. It fizzled out real quick, came right back. We took that trendline support and extended it to the new low that we made, and here's the break. So this confluence break is a little bit bigger here. Why? Because this is now invalidating the monthly opening range low. Okay. What is it? March opening range low. Okay, so we'll want to be very mindful of whether we close below this region or not today. If we do push lower, I'd be looking for a basic 236 first. Remember on the daily chart, we showed you where that 38.2 came in, and that's going to be the bullish invalidation level. But on a basic retracement, we've already broken that 236. Okay, I'm not going to stress that then. One more thing I just want to check out. Just the advance from that last leg up from late February. $12.10, first initial target. 12.01, and then that bullish invalidation 11.94. And we'll look to see for possible long exposure as we get into those levels. But I think you have a little bit more downside to go before this thing turns higher. And the broader trade, like I said, still remains pretty constructive in my eyes. Remember, aside from price action, we talked about this at length yesterday. Aside from price action, just the fact that the momentum signature has changed so radically over the last since the start of the year. Remember, this is the highest momentum read that we've seen since 2012. We were pretty close. First test of basically 70 since 2011 when we made the record high. It's the last time this thing was at 70. Period. Ever since that high, we've never made a run at 70. Subsequently, in 2012, we tried to make a high here. Came in just sub 70. This is the highest mark we've seen since then. Okay, so I am looking for a broader support hold on this pullback. 1194 is what I would be using near term as the near term bullish invalidation. Gary, does that make sense, man? He says, is there SSI reading for gold? There is, Gary. They do have, FXM does have SSI reading that only the analysts can see. Listen, there's not enough open interest on it for it to be anything that's feasible as a major indicator to use in trading. Remember, guys, SSI is only as valuable as the open interest. Okay, if you got one guy over in Europe pushing huge, huge lots of gold, the SSI is going to be broadly skewed in favor of that client. Essentially, right? Because gold can't be traded here stateside. So remember, when we're using SSI, we always need to be mindful of what the open interest is. And the more traders we have using that asset, or the more traders in that position, the more conviction you have on the SSI reading. So Gary, with gold outlawed here in the United States, as far as trading the CFD, the SSI on it has very small open interest, and therefore I wouldn't stress that as an indicator by any means. All right? Let me know if you have any more questions on that. Patrick says, nice work. Thanks for showing your dollar CAD scalps. Hey, you're more than welcome. Craig says, I've been burned twice on sterling dollar long in the last couple of days. I know you covered it earlier, but I came in late today. Could you put your chart up again so I can take a snapshot? I'm really trying not to revenge trade. Craig, don't do it, man. Trust me. I'm not going to lie to you. I got stopped out of a sterling dollar position too. But it kind of offset with another position I had on the sterling long last week, essentially into the end of the week. So basically, I'm a wash on this for the last 2 weeks. But I hear you. And a funny thing is, I don't want to encourage. This is going to come out so wrong. I know it is. I don't encourage bad behavior, Craig. But typically, what I found when just as you're giving up and you're saying, "Wow, dude, I'm not even going to try this anymore. I've gotten stopped out so many times." Typically, that's when the market's ready to turn. You are your own SSI at that point, right? Now, I shouldn't be saying that because you shouldn't necessarily now start wondering on or start pressing all those trades because you're having some doubt. But, something that me and Jamie throw to each other all the time, we say to each other all the time is the market's moving on its own time frame, not yours. And that's something that, as corny as it seems, is really important, especially for near-term traders. The dollar CAD position, that was a trade that I was, again, long from last week. You guys, on this break below here, we played a long position. We closed it out into last week's trade, missed the entry, had a nice long last night. It's frustrating, right? It got stopped out at the low tick, literally, because I played it a little bit too close to the heart with that break-even stop. Such as trading, there'll always be more opportunities, Craig. And I don't want you to be discouraged. But here's what the pound looks like on the 30-minute. Nice reaction off that median line. Let me bring the 5-minute chart up. Come on, cat, give me a pullback. I like it. I like it. I like the reaction that you're getting. It's continued RSI divergence. Higher, higher low, higher low. We want to see this candle close, but this looks like it's going to make a higher low. Oops. Yeah, I'm going to stock an entry here on a pullback. Let me get the platform set. Yeah, this looks like it's, you may have just missed the trigger, but it's a nice trade. You got to trade to break a basic trendline resistance. More so, importantly, that trigger break. If this pushes through 50, that's all the conviction I need. And again, remember, quarter of the ATR is 38 pips, so you're in that allotted amount right now. We're about 3 minutes ahead of the U.S. Open. You get a pullback in here. I'd be more interested than pulling the trigger. I'd be much more inclined to try to take the long. Sorry, I know I got I got cut off on that. Craig, you're more than welcome. Gary says, okay, cool. Just wondering if all the little guys are thinking long, then maybe the big guys are considering shorts. You know what to do for that, Gary? You don't want to use SSI, my man. You want to use COT data. Jamie on Daily FX every Friday publishes the COT report, which is basically, or I think it's on Mondays, excuse me, which is basically telling you what the long specs and short and larger speculators and institutional clients are doing. When you see commercial really pressing the long, I think that's what you want to be looking for. So I hope that helps, Gary. On gold, Craig says, thank you much, Mike. Hey, anytime. Eileen, I appreciate that. And Craig, I think I got your question on the pound. Let me know if you have any other specifics. If not, we'll go ahead and wrap things up here. I am going to be, stalking an entry. Can't even sign off without getting the mic chopping out. Guys, I just want to say best of luck trading. We will see you next week, same time, same channel. And don't forget, 1 p.m. Later today, Jamie will be coming up with his midweek strategy webinar to give you an update on some of the swing trades and the broader setups that we're looking at heading into the close of March trade. See you guys tomorrow. Best luck trading. Cheers.